Here, the recording is on. So, hello everyone. I bet you missed me, of course. So, to those who don't know me, my name is Katerina, and my colleague Michael is going to join me very soon. So, we are here today to discuss the USA retail sales numbers for January that are going to be main release of this week, of course. The data will be out in about 10 minutes from now. And as I said already, me and Michael also will join me a little bit later. So I'm here to cover the fundamentals for you. So as you can see on my screen, at the current moment the forecast stands at 0.1%, while the prior figure stood at minus 0.1%. So let's take a look at the projections and as well as the historical movements of the indicator. So talking about those two, as I said already, retail sales are forecasted to increase by 0.1% over month, reversing December's minus 0.1%. The control reading, excluding sales of volatile items, is expected to show a stronger 0.4 rebound, suggesting that the soft patch in consumer spending seen in the end of 2015 may have come to an end at the start of this year. However, the recent batch of mixed data is likely to continue with the preliminary University of Michigan confidence survey due today also. The index is forecasted to decline to 93 in February from 93.3 previously. So let's move on to the experts' estimates. As always, we have a number of experts from different banks and institutions sharing their opinions on the matter, and according to their views, we have the Bloomberg survey summary, where the median estimate stands at 0.1% growth, average estimate stands at 0.10%, high estimate stands at 0.4%, while the low estimate is at minus 0.5%. And the total number of estimates has reached 85 this time, quite a big number. So let's talk also a little bit more about the projections of the different experts. So here we have Jack Kleinhans, the chief economist of NRF. He said that the economy had a bumpy ride in 2015 with fits and starts along the way, while the research team at TDS is calling for a 0.1% month-on-month decrease in U.S. headline sales, which would mark the first back-to-back decline since January 2015. I see that guest 155 wants us to speak Spanish, but unfortunately we broadcast only in English here. So let's take a look what else do we have here. One more quote from the research team at CDS. They said that dragging down the headline figure are weak auto sales and falling gas prices. Stripping this out, the excluding autos and gas figure should see a healthy 0.3% month-on-month gain. The consensus estimates are at 0.1% month-on-month and 0.3% respectively. So no change is expected for U.S. retail sales in this report versus the previous month. This is the quote according to the Capital Spectator's average point forecast for several econometric estimates. The average prediction marks a slight improvement versus the fractional decline posted in the previous month. And also the Capital Spectator's average forecast for January is at the low end of projections via a free service of economists. Know that all the forecasts translates into substantially stronger pace of growth for the year-over-year spending rate in January versus the previously reported annual change. And also, let's quickly review the Dukascopy community member sentiments on the US dollar versus the Japanese yen currency pair. And as we can see here, our traders are rather bullish on the matter with 68.09% versus the 31.91% bearish votes. And of course, we have a couple of comments, but since I am short of time, I will pass the floor to Michael, who will kindly cover the technicals for you. So, Michael, please.
Hello once again, everybody. So, for the given day release, I have the positive surprise trading strategy since I'm focusing on the retail sales specifically, and we have, of course, the sell market since we expect the euro dollar to go down today. The market sentiment for the given pair is somewhat bearish, with 55.08% of all positions currently short, and the sterling being, the US dollar, not the sterling. The US dollar being bought in 48.51% of all cases, and the euro sold in 57.97% of all cases. 62.20% of all pending orders in the 50 pip range are to purchase the euro, while in the 100 pip range it's 65.17% also to purchase the European currency. Other market participants are all bearish towards the euro dollar, and they all have quite a similar sentiment. Rwanda has 64.09% of traders holding short positions. Saxo Group has 63 3/4, almost 3/4 of traders holding short positions, and the daily FX has a bearish sentiment of 63%. If we look at the market reaction table, we can see that the retail sales in the past 5 releases mostly disappointed us, with the exception of the previous one, where the data met expectations. So there is a good chance that we might see the data disappoint again today, and a reason for that is also a bullish trend, which I'll talk about later. Anyway, the largest reaction for the specific data release was 41 pips, and the smallest one was only 18 pips. So the average reaction based on these reactions is approximately 27 pips, and based on it we can set the take profit and stop loss levels accordingly, with the stop loss level located at 1.13 major level, right on top of the 200 period simple moving average. So that's a rather strong resistance, and we should not see a hike above this area in case the data disappoints. And the take profit level is at 1.1246. There's actually no other major level close by, and this trend line, it was somewhat breached recently, but nonetheless it held the pair in a bullish trend for a few days, so this line could still prevail and push the pair higher, and yes, gave 168. There used to be bigger reactions, but it's not our fault that they're only just under 30 pips this time, so hopefully we'll have bigger reactions. The retail sales is nonetheless a rather important economic data release. So finally, the technical indicators, which are mostly giving us bearish signals, so supporting that the pair will go down, but the most important indicator is the 30-minute time frame indicator, since it was updated specifically for the given data release 30 minutes ago, and it's giving us mixed signals, so unable to give us a clear view of what will happen to the euro dollar in approximately 20 seconds. And what I would quickly like to mention is the top forecasters of the Bloomberg survey concerning the retail sales. BNP Paribas expects the retail sales to grow up to 0.4%, while the Commerzbank expects the data to remain at minus 0.1%. And we see the pair trying to go to the downside. And yeah, the retail sales is slightly better than anticipated, 0.2%. And the core retail sales is actually also better, but we nonetheless have a rather mild reaction of only 13 pips, with the take profit level not reached, unfortunately. And this gives hope for the future. I actually do see it reached right now, with a reaction of 22 pips. And this gives us hope of the future rate hikes in 2016, with all the speculation that there might not be any this year, and the recent dollar weakness because of that. So that's all from my side, and back to you, Kate.
Thank you very much, Michael. So guys, you still see the reaction on Michael's screen. And to wrap this all up, I would remind you once again that the actual numbers came, well, in line with expectation pretty much, a little bit better. And the prior figure was revised from minus 0.1 to 0.2%. Anyway, so I hope you had a good trade on that. See you next time and have a wonderful weekend. Bye.